Guys, welcome to lesson 13 of Stretchcation. And this lesson is called Putting It All Together and Finding Strat Setups. So in lesson 11, we talked about zooming out a bit, and that lesson is going to play a role in this lesson. And if you've watched all the lessons so far, you have learned that the strat is far, far more than just the strat combo sheet, right? The strat is so much more than just this. There is so much more context and principles behind why we do the things that we do. So I took the Stretchication lesson plan and I copied it on this sheet and I kind of turned it into a checklist. Because the most important thing is, why are you taking this trade? You cannot just take a setup on the strat sheet just because you see it. There has to be context. You have to have higher time frame context. You have to have all of this context, and we're kind of going to go through it. So why are you taking this trade? Is it a domino effect? Will this actionable signal trigger a higher time frame actionable signal? Multiple time frame analysis and magnitude. Is the higher time frame in force, and does it still have magnitude left? So with this, say the weekly is in force and hasn't hit target, and that's okay, and you're going to trade a bullish strat reversal until the higher time frame hits target. So that's acceptable as well. TTO, so has the chart had corrective activity recently and is setting up an actionable signal back in the direction of full time frame continuity so it can continue on and hit its higher time frame magnitude. Full time frame continuity. Are you trading with full time frame continuity and the surrounding time frames are the same color? Are you trading against full time frame continuity? And if you're trading against full time frame continuity, you know you can only do this if the price has reached an exhaustion level and you're attempting a counter trend exhaustion reversal. Same thing with broadening formations. Those are counter trend trades, but they are at exhaustion risk. So, are you seeing a potential exhaustion reversal at the top or bottom of a broadening formation? You must be mindful, though, that you are trading counter trend, and if you're wrong and it doesn't want to go, you have to be prepared to stop out if it doesn't work. Trader style. Do you even want to trade exhaustion reversals? Meaning at the top or bottom of a broadening formation or at price exhaustion, because those are against full time frame continuity. Some traders only play when they have full time frame continuity, and that is totally fine. So if you're a bull and you only want to trade when the month, week, and day is green, that's fine. And then you know you're not taking any bearish strat setups. You're only looking for bullish setups. That's fine too. So you have to figure out who you are as a trader and what you like to do and trade it that way. Exhaustion risk. Are you trading something on a smaller time frame that has already hit its target objective on a higher time frame? So is the setup you're looking at already at exhaustion? Because if it is, it's already done. The trade's done. Tightening ranges. Are you trading something that is stuck inside on a higher time frame and unlikely to move? Are you trying to trade a daily setup, but it's still inside the previous week on a Friday? On the last day of the week, it's still inside the previous week's range. You don't want to be trading something like that. It's stuck. It's not going to go anywhere. Risk reward. Is the risk reward worth taking the trade at all? Is the potential reward bigger than the risk? Okay, so back to lesson 11 and the big picture. So what I do is when I'm looking for strat setups for the following day, I am using 3 time frames. all of my day trade ideas come from higher time frame context and strat principles. So when I'm charting, I am using the month, the week, and the day. And in my opinion, one time frame is not enough to get the big picture. Because if you're too zoomed in, you're not going to see if price is at exhaustion, if it's got more room to go, it hasn't hit magnitude. It's too hard to tell. And me personally, I want my actionable signals on whatever time frame to trigger a higher time frame actionable signal, and that is the domino effect that we learned about. And what's cool about the domino effect is this way I have full time frame continuity in my favor, and I also have two participation groups. So usually the daily and the weekly players, they're on my side. Everything's going in my direction. We want as many things in our favor as we can get. So when I have a daily actionable signal triggering a weekly actionable signal, that is excellent. I have two different set of traders playing in my direction. And this also means if I have a setup triggering a higher time frame setup and going outside of the previous week, it means that I can get nice, big, large trading ranges because I know we're not confined to a small little area. And all of my daily setups come from higher time frame context, but I have a clear directional bias on all of the strat principles. And it drives me nuts when I see people on Twitter saying bullish above this level, bearish below this level, because that tells me that they really don't have the context. They're just going to trade either way. And that's exactly what you don't want to do when you see an inside day setup. You don't just want to trade it either way. You want to trade in the direction of your higher time frame bias. Because sometimes if you're not, they're just not going to hit target. And the reason is if you're trying to trade a bullish 212, but you have every reason to believe the chart's going lower, you would prefer to trade a 212 down than a 212 up, because you know if you're trading a 212 up, but you have full time frame continuity to the downside, you are longing a TTO. So you're just longing corrective activity. And we talked about that in another lesson, how corrective activity, you cannot expect a counter trend corrective activity move to hit the target. I am predominantly like 90% a day trader. But this same exact method and same exact questions work for higher time frames and for swing trading. Instead, you might use just higher time frames. You might use a quarterly, monthly, weekly, or you might use a monthly, weekly, daily, or if you're even slower time frame based, you might use a year, a quarter, and a month. It all depends on what you like to trade and what time frames you prefer to trade on. So I have two examples of trades, and one I would favor over the other, and we're going to talk about why. And everything is based on the strat principles. So, for instance, we're going to pretend that today's price action did not happen yet. Okay? But I'm sitting at my desk, pretend I'm sitting at my desk last night, and I'm trying to find actionable signals to trade in the morning. Okay? So let's say this triggers a 2 up, 2 down daily reversal. Okay, if you're so zoomed in that all you can see is like this much price action, you're doing such a disservice to yourself and to the strat principles. All right, so why wouldn't I have taken this to the short side? So first of all, starting with the monthly, The month is bright green, and I know it looks like it hit magnitude, but it didn't. It didn't by 10 cents. So if you look on the weekly, you can see this little gap between this candle's wick and the target. So I am not exhausted. The month is green. I do not have exhaustion risk. So why would I want to take a bearish setup when I know that we are trying to reach for 64.44? I wouldn't want to. Instead, what I would want to do is sit this day out and then wait for a bullish 2 down, 2 up, because my higher time frame context tells me we're going up here. So if I had to pick between this chart and the next chart I'm going to show you, I would not pick this one because we're not at exhaustion and the higher time frame tells me higher. We actually have 2 targets higher. I'm not going to pick this one, and you'll see why when I go to the next one. So this was MU on the day. XOM. Okay, let's first start off at the monthly. Now, the monthly is green, yes, but did we hit exhaustion risk by making a new high? Yes, we did. So we are at all-time high exhaustion risk because price took out the objective. So the monthly objective of this setup, a 2 down, 2 up, is to take out the high of the 2. So we did that. So what does that mean? That means that we're at potential exhaustion risk. Okay? And that line, that exhaustion line, shows up on all my charts. You're going to have to ignore this big wick. The whole market had a huge issue this day with price. So we're going to pretend that wick doesn't exist. But so if you look at the daily, I know that we're at exhaustion risk, which means when we're at upside exhaustion, what are we looking for? The answer is bearish strat setups. So anything on the right side of the sheet, or the 2-sheeter in this instance. Okay, so what do we get? We get a 2-1-2 reversal. Would I take this? Yes, I would, but I also know I'm trading against full time frame continuity, but it's okay because I'm at exhaustion risk. Now, this trade hit magnitude. Target 1 was there, and then target 2 was a gap fill, which also hit target. So on this chart, even though we had full time frame continuity to the upside on the year, quarter, and month, I know that, but I'm a day trader and I'm looking for strat principles to tell me that it's okay to try and short this. So again, we had all-time high exhaustion risk. So for me, it's okay to try and short this. And I would never know that if I was this zoomed into the chart, right? I would just say, oh, this looks like a nice healthy uptrend and not want to short. But we have strat reason to short it because we are at exhaustion risk, and therefore we can play exhaustion reversals. Now to go back to MU, we are not at exhaustion risk because we did not take out our long objective, which means we should not really be looking to play shorts because we know that price is going to want to come up here. Okay, here is a swing trade example. Now this month isn't technically closed, nor is this quarter closed, but here is the potential setup for the quarterly chart Okay, we had a 2-1-2 down that hit target. Okay, the new year and new quarter opened, triggered down, came back up green. So what you have here on the quarterly for a potential actionable signal, because this quarterly has 2 months left, is a potential outside quarter, right? Because it already fits the requirements of triggering one side, turning around, going the opposite direction, retracing 50% or more. So we would target up here. So this is an actionable signal on the quarterly. That's our higher time frame context. So we're going to look for actionable signals on a time frame down. So on the monthly. Now we don't have an inside bar, so that one's out. We're not closing the month inside. We're closing the month as a 2 down. So that only really leaves the potential for a 2 down, 2 up monthly reversal. So you say to yourself, you know that your quarter is a potential outside month, and as long as we're above the 50% line and you have an actionable signal, you can take it. So you say to yourself, if this 2 down, 2 up triggers, that's actionable, because your smaller time frame actionable signal can reach your higher time frame target. So say we close right where we opened. You would expect that to happen next month, creating an outside month and on a bullish actionable signal. So it works the same. You still need to use multiple time frames though to get your context, because if you didn't have an actionable signal on the quarterly, do you really want to be trading the monthly? But then you could also look at this as potential bottom of the broadening formation, and we're going to go and try and take out the highs after taking out the lows. Okay, we're going to do a little drawing to kind of cover what I'm talking about when I'm saying these things. So will an actionable signal trigger a higher time frame actionable signal? So pretend this is a weekly chart and you're expecting the next one to be a 2 up. So you got a 2 down that closed near the highs and you're expecting a 2 up. So say the daily sets up a 2-1-2 bullish, because our bias is up, because we're looking at the weekly time frame and we know that we had a 2 down that closed at the high. So the next logical 2 would be a 2 up. So on the daily, you find a strat setup before the trigger that can trigger the higher time frame trigger. So that's the domino effect trade. Okay? And you want the week to end looking like that. But you take a daily actionable signal to trigger the higher time frame actionable signal. Okay? So multiple time frame analysis. Is the higher time frame in force, and does it still have magnitude? Same thing. You have a weekly 2 down. You're looking for a 2 up reversal, but maybe the first day goes there. Then you get a 2 down. So we're visualizing the weekly, but trading on the daily. But ideally, you would have these charts up side by side. But maybe you don't enter on the weekly signal. You wait for a daily actionable signal. And then you get a 2 down, 2 up on the daily to reconfirm the 2 down, 2 up on the week and hopefully hit target. So you can get in them before the week triggers or after the week triggers on a smaller time frame. It all depends on how you want to do it. There's no right or wrong way. One is just already in force, and one you're anticipating it to go in force. And then full time frame continuity, just are you trading if you're bullish in a giant uptrend? And if you are, you don't want to take the strat short setups. You want to let those play out, and then you want to wait till you get a bullish strat setup. or vice versa if you're trading to the short side. And then you all know when things are at exhaustion. So in summary, when I'm looking for my day trading setups, I'm using all of these time frames and all of the strat principles to formulate my bias, where I think price is going based on exhaustion levels. And SPY, for example, today, or SPX, whichever, I did not want to take this 2 up, 2 down because we aren't at exhaustion risk. We didn't take out the highs. We didn't meet the upside objective. So I'm not trying to short this, right? Instead, I would look for the bullish setup to materialize because I know that's the higher probability trade. I don't just want to be taking setups when I see them and I don't have reason to be taking them. So I hope this helps. Catch you guys in the next.